Hello everyone, welcome to my channel. My name is Oshin and I'm not a financial advisor. In this video, we're going to be taking a look at how I generally pick stocks. I must state here, I'm a long-term investor. I don't believe in short-term trading. I'm not a day trader. And my points here and my strategies here majorly works if you're a long-term investor. If you like me putting out contents like this, please hit the like button, subscribe to the channel and turn on the notification bell. Also, do not forget to put a comment down below. I'll ensure to answer any of your questions as we proceed. But first, if you're in Nigeria and want to invest in the US stock market, click on the link in the description below to download Invest Bamboo. It's available on the Play Store and the iOS App Store. Also, I have made an extensive video on how you can invest with the Bamboo app from right here in Nigeria. Click in the clickbait above and that will show you exactly how to invest with the app. Now let's get back to the video. We'll be looking at the stock picking strategies I use, and the first thing I usually do before investing in any stock or before investing in any company is I check what industry will grow in the future. So for example, I believe there's going to be a lot of growth in robotics, in artificial intelligence, in IT sectors such as software as a service, 5G, virtual reality, and of course augmented reality. I also like to believe that the future is in autonomous learning or autonomous technology, clean energy, and of course electric vehicles. I like to predict and see what sectors might be growing in the future. The second thing I do is I check the size of the target market. For example, I would rather invest in a company that has a global market, a global impact. For example, I'd rather invest in a Facebook than invest in a GT Bank. A GT Bank is localized and in Nigeria. A Facebook is globalized and across the world. One way or the other, we as individuals have used minimum a product from Facebook. We've used the Facebook social media app. We've used Instagram app. We've used WhatsApp. Some of us have used Oculus. I like to invest in companies that have a large target market. The third strategy I use is I try to pick companies that are performing the best in its sector. So I look at the growth potential and the innovation. Now, in terms of the growth, I look at the revenue growth and also the growth in margins. For the revenue growth, I like to invest in companies that are growing greater than 25% every year. Now, for a company that is growing 25% every year in its revenue, it's going to basically double in 3 years, it's going to quadruple in 6 years, and it's going to be an 8-fold company in terms of revenue in 9 years. The second thing is its growth margin. I like to invest in companies that have a high growth margin. For example, Tesla currently makes about 25% margins on each car it produces on the average. Apple currently makes on its iPhone margin as high as 200% on the phone that it makes. For example, the iPhone XS Max costs about $1,200 in the market, and Apple only uses $450 to make that phone. Now, not everybody knows this, but back in the days, a typical iPhone cost Apple about $150 to make, and they sell that product for $500, $550, $600 in the market. Now, that is a huge margin. The fourth thing I look at is the quality of its products or services. Like I said, I always try to settle for the best in the industry. Every sector or every industry has an industry leader. For example, in e-commerce, Amazon is the industry leader. It used to be Walmart, that was the largest retailer in the world, but Amazon took that place about 2 years ago. In semiconductor space, you have Nvidia as the leader, even though you also have AMD in that space. In electric vehicles, you have Tesla, even though you also have Volkswagen in that space. And the fifth thing I do is I check out the business model, the balance sheet, and the management. Are all these three things solid enough? In its business model, I look at how a company sells its product. For example, traditional vehicles sell their cars, the likes of them Ford, GM, Toyota, Honda, Mercedes-Benz, BMW. They sell their cars through dealership centers. But Tesla sells their car directly to its customers. You simply go to their website and you order for your car, just like ordering for a computer system on Amazon. And that business model to me is actually excellent. It cuts off the additional costs that could have been incurred as a result of selling their cars through dealership centers. We also saw the advantage of this during the lockdown, this period. The second thing is you want to be looking at the balance sheet. And when you're looking at the balance sheet, you want to be looking at the free cash flow. Now, the free cash flow is simply the amount that is left after a company has paid its staff, made its product, done everything it's meant to do, its overhead, and the remaining cash flow that is left. That is the free cash flow. So I typically like to look for a company that at least has 10% free cash flow after all of its expenses. Also, the balance sheet comprises of you looking at the debts, the assets, the margins, and obviously the revenue or sales generated. You typically want to invest in a company that has its assets greater than its debts. And for management, I prefer to invest in a company led by the founder, at least at the very beginning. For example, Apple was led by Steve Jobs. He brought in a lot of good ideas. He made a lot of innovations within that company before he passed on. We also see that now greatly in Tesla. We see that Elon Musk is the founder of Tesla and he has been making excellent innovations within that company. It's easier for the founder of the company to be running and managing that company. He sees the vision for the company clearer than anybody else, especially at the beginning. And the sixth thing I look at is I check the company and its stock history. For example, I like to make sure I invest in a stock that has a stable upward trend at every point in time. In doing that research, I check what were the catalysts or what were the things that caused a stock to dive at any point in time. For example, I would check the reputation of that company. We know how Wells Fargo had issues with creating fake accounts and what that led way back in 2016. So I like to check the history of a company, and we see that Wells Fargo is actually still suffering from that incident. The seventh thing I like to do is I like to ask myself whether I've had any personal experiences with that company. For example, have I used their product before? What did I feel about their product when I made use of it? Was it an interesting feel for me? Was it something I felt that more people will want to use and pay for? So I like to look at it from that standpoint. For example, the reviews I've seen on Tesla, even though I haven't driven one before, gives me or makes me realize that Tesla is actually an excellent car. The feel when you drive, the suspensions is incredible. The eighth thing I want to look at is, does the company pay dividend? Now, you have some companies that actually pay you dividend monthly, quarterly, biannually, depends. For example, Apple pays dividend, Restwood pays dividend, ESRT pays dividend. So if you're the type of person that you believe in building a dividend portfolio, you might want to ask yourself some of these questions. The ninth thing I look at is the current stock price. Now, a low stock price doesn't mean a company is good. At the same time, a high stock price doesn't mean the company is good. So generally, I ignore the stock price and focus only on the company fundamentals. The fundamentals of a company is the most important thing to me and not the stock price. But generally, we know that if a company does well, we see a reflection of that in the stock price. If a company does badly, we also see a reflection of that in the stock price. But for me, I do not look at the stock price of any company before I invest in it. And the final strategy I use is for the sake of diversification. For example, you might not want to be heavily concentrated in certain sectors of the economy or in certain industries. That might change your mind, or that might determine which industry you probably want to invest in next. For example, if you find yourself heavily invested in energy sector, you might say, okay, you've had enough with the energy sector, you want to invest in IT sector. Or if you find that your portfolio is heavily IT inclined, then you might say you want to look at other sectors or other areas like consumer sector. So it depends. All of that can actually shape you. At the end of the day, you want to have a balanced and a well-diversified stock portfolio. Thank you very much for watching this video. Please hit the like button, share this video as this content might be helpful to someone. Subscribe to this channel, turn on the notification bell so you know when I upload my next video, and above all, invest safe.